Did I ever tell you what the definition of insanity is?
Today, I want to talk to you about Bitcoin, and specifically, I want to talk about four problems that I see with Bitcoin. Now, as I'm discussing this, I want you to keep in mind that I'm not necessarily talking about these as indictments for cryptocurrency as a whole, but specifically for Bitcoin. I know that most of the time when you see stuff, is particularly online and on YouTube, about Bitcoin, it's very bullish. And this is just me trying to offer my, caveats and my contrarian positions on it because we need to make sure that we aren't overzealous in thinking that there is no downside, because there is always a downside and potential trade-offs when it comes to a investment or any system for that matter. To start off, the first issue that I have with Bitcoin is it's deflationary. Now, this is because Bitcoin, there's a planned rate that Bitcoins are created or mined, and there is a set number of Bitcoin that will be mined lifetime. It's, I believe, 21 million Bitcoin. And this rate of mining occurs at a decelerating rate in order to simulate a limited supply of a resource, i.e., make it seem like you're mining a natural resource like gold. That's something important to understand, and we'll touch on that later. But it's also important to understand, okay, well, deflationary, that's not something that you talk about normally. What does this really mean? Well, we first need to understand that currencies as they are right now are generally fiat currencies, meaning they are printed by the government and they're given a value based on the treasury or the central bank in that country or region, depending on whether you're talking about the European Union or America. What happens is with inflationary currencies, value is created over time and more money is put into circulation to match the total value increase. So when I do some amount of work, I produce some amount of value into the economy that accumulates over time. And as that accumulates, either currency needs to keep up with that level of increase in order to maintain stable prices, or if you don't print more currency, then what's going to happen is the currency value is going to go up because the total value in the economy has gone up. But that means that it's going to make prices lower. There are a couple issues with that. Let's dive into it. The incentives when it comes to a deflationary currency are that when value is created in the economy, that increases, but then the supply of money doesn't. And this is a real issue because the currency's real value increases, prices for goods decrease, and that means that people are incentivized to hold currency, not to stimulate economic growth. This is what can lead to what we call a deflationary spiral, where you stagnate the economy because nobody has an incentive to do anything. And this is counter to the role of an economy, right? The role of an economy is to provide societal resources and reward the value created within that society. And this does the opposite. When we're looking at the incentive structures within an inflationary currency like the US dollar, those are that as value is created, more money is printed. This maintains a stable value. And this then incentivizes people to work so that they can make money and spend it to stimulate the economy. Because otherwise, they're losing money via inflation unless it's invested or being spent on goods that they need. Now, with fiat currency, inflationary currency, we adjust this through what's called quantitative easing. Things like adjusting interest rates, which is what the Fed does, and then printing money, which is what the Treasury does. And essentially, when we need to spur more economic growth, i.e. growth is down, then we will lower interest rates to incentivize people to invest more because it's cheaper to borrow money. Or we will print more money in order to provide extra liquidity to lenders or to individuals within the economy so that way it can spur economic growth. This is basic Keynesian economics. And what this does is it helps maintain a more stable currency, and it helps to minimize or at least control the effects of inflation or deflation. And this is why you'll see central banks generally have a target of about 2% inflation per year. Now, most of the time when we talk about inflation in normal day-to-day life, we think of it as a negative. And that's why when you hear something like Bitcoin that's so different, you're like, well, this may seem good because effectively you're getting paid for holding Bitcoin. And that leads into my second issue with it. For a currency, it lacks stability. This isn't a new complaint about Bitcoin. This essentially means that the currency fluctuates a lot. And this is a problem because when I go to the store to buy food or whatever items, I don't want the value of what I'm spending to swing wildly. Because if I go make a financial decision to go and buy something at the store today, there is a very high chance that because it's deflationary, that is going to be worth more in the future, then I'm less likely to spend it. That isn't a good thing for a currency. And Bitcoin's inherently unstable because it doesn't have a control mechanism like quantitative easing through central banking. There are issues with that, don't get me wrong, but this is something we need to understand when we're talking about this as potential for, being a currency. Moreover, imagine signing to pay a loan, right, for the next 10 years with what is today $1,000 worth of Bitcoin. By the end of the term, this could be $50K in dollars worth of Bitcoin. That isn't good. That's terrible for financial decisions. It's going to make it harder for people to borrow money, which is kind of an important aspect within the economy. So deflation actually increases the cost of the loan because the amount you owe continues to increase in value. And this is why, inversely, inflation actually lowers the real cost of an outstanding loan. So there are positives and negatives to inflation, but one positive of inflation is for people that are using a loan, it actually saves them money in real value. And so this brings up, who advocates deflation? Like, why do people that advocate Bitcoin want deflation? Because this is a design feature. This isn't a mistake. And that's the third issue. Back in the day, there was a very common thing called a gold bug. And this is a person that was very bullish on the idea that we needed to return to the gold standard, that it was a mistake that the US got off of it, and consequently the rest of the world got off of it. And my view is that Bitcoin simps are just new gold bugs. It's just the updated version. And this really shows up when you look at the people that were behind the initial ideas around cryptocurrency. This is where you kind of see this. The desire that they have is to have a currency outside of the control of the state or central banks. And this has a long history. Primarily, it's been focused, like I said, on the gold standard in the US. And when you look at the people like Timothy May, who were pushing cryptocurrency as an idea in the 1990s, and we're talking about like 1992, like it's been a long time coming, you see the same ideology. There were people that were constantly trying to blame economic failings on the US getting off the gold standard and being controlled by central bankers. The argument was that these central bankers were stealing the value of your money through inflation. And this is a wild, and if you look into it, it's an anti-Semitic conspiracy that goes back a lot further than that, but it flat out ignores two main things. One, how wildly unstable the gold standard actually was, because ironically, when people are arguing this from a free marketeer perspective of getting the government out because they want, capitalism to flourish, ironically, the push for central banking was by capitalists like JP Morgan specifically post the Panic of 1907, because they wanted more stable asset values and they didn't want to keep seeing these flash crashes that we were experiencing during the early 1900s and late 1800s because of the gold standard. The second thing is that all the problems that they're complaining about are a function of a market economy. What I mean by that is that where those who have more financial control benefit the most. That's why when these people are making these complaints, they're unknowingly complaining about an inherent flaw within capitalism, yet at the same time arguing for a free market and lack of state control. So they're just ignoring the way the state benefits markets. It's an ahistorical way of looking at the world. And I highly suggest looking at Dave Columbia's book, The Politics of Bitcoin. It's a really good read on the ideological underpinnings of Bitcoin. It's super short. And I'll plan on doing a review of it at some point. But like all the stuff I've been talking about, I'll have links in the description. So check those out if you're interested. Okay, and then my last main critique of Bitcoin that I see, number 4, is countries as competitors. So if the problem initially is that the government has too much control over our money and we need to have an alternative. What is stopping the government from just outlawing it or making a competitor? Right? Like, if the whole problem is that someone views the government as stepping in and influencing the market and having more control, well, what's preventing that again? Doesn't it stand to reason that these people with financial control, that they are incentivized to use that financial power to prevent dissidents, just like they do in literally any market? This isn't new, and this isn't something specific to Bitcoin. This is something that is always existing, and it's something that is talked about in Imperialism, the Highest Stage of Capitalism, specifically Chapter 3 on finance capital. So definitely check that out if you want a better view of this same problem that people are complaining about. And this honestly is why I've never taken Bitcoin too seriously as a challenge to national currencies. To think otherwise, in my view, it just kind of ignores the very problem that it seeks to solve. For example, since 1944, at the Bretton Woods Agreement, the US dollar has been the international reserve currency. And what this means is that internationally, many commodities are priced in dollars, and banks in other countries often will keep US dollars on hand for international exchange. And this smooths over international transactions and allows them to offload risk in case of different currencies that are less stable, because the US was considered the most stable of the currencies at that time. It also is because the US at the time had over 2/3 of the gold in the world. And initially, they pinned all these other currencies, these 44 other countries' currencies, to the US dollar. And then they required that the US dollar would be pinned to gold. So functionally, there was still kind of a gold standard underneath, right? And then because of spending that the US government wanted to do, by the 1970s, we had essentially abandoned it completely. Regardless of the lack of gold underpinning the US dollar, this status as international reserve currency heavily benefits the US dollar's buying power internationally. And understanding this in context is important because it shows how arbitrary any of these systems are, since the allied powers were who made this decision. So deciding for an ally, the US government, to have control is anything but objective, right? When we're looking and trying to pin a currency, even when we choose gold, gold isn't an objective value, right? Gold, it depends on what you're using it for. Gold doesn't inherently produce value. This is a very silly view. It's trying to feign objectivity when reality is that it's all based on who has control at the time. If the US didn't have that much control of gold, then probably wouldn't have had anything to do with the gold standard initially, and there still would have been a way of making sure that the Allies had a good amount of stranglehold on the global economy post-World War II. And so this is why I don't see the US allowing any other currency to challenge the dollar without a ton of resistance, whether that's militarily or otherwise. Why would they? And for people that are thinking, well, but Bitcoin's decentralized and the US has no say in that, but not really, because there's one thing that's for certain. I can have different buying decisions and purchase whatever I want, and that's all good and dandy, and I can do that with dollars, I can do that with Bitcoin, whatever. But I can't pay my taxes in Bitcoin. That's something that I have to do. That's something that everyone in the US, in a US company, has to do. Therefore, there's going to be a backstop, unless the US falls off and then someone else is able to establish power and decides to adopt Bitcoin. However, that's not what we're seeing. What we're seeing is that there is an aversion to private cryptocurrencies challenging national fiat. This is very apparent in India and China recently, who are both making their own national versions of cryptocurrencies. And so, in my view, to assume that the US won't do the same is very naive and utopian. Those are my four main issues with Bitcoin as a currency. Now, there are some other issues that I am not addressing in this. I'll put a link in the description, though, for these. And those are, of course, the energy consumption that has been brought up. Specifically, the amount of energy consumption that Bitcoin uses is around this amount that the country of Argentina does per year. And also, when we're talking about actual use value of that power, it is enough power to fully, annually power about 1.5 million homes. So this is something that, in my view, I don't think it's the juice is worth the squeeze, right? I don't think that you have the use value being outweighed by the exchange value of Bitcoin. And I'll have to do a video on use value versus exchange value as well, and how that affects our perception of within economics. The other one is, of course, that a lot of people will claim that it's not really even decentralized anymore because re-centralization is occurring through dominant exchanges and through holders, because again, it's deflationary. People that hold it longer and people that have more, of course, are able to hold more because they don't need to spend as much to meet their basic needs. They inherently have more control of the Bitcoin economy. So overall, I understand where they're coming from. I understand that there are big issues when it comes to central banks. And yes, they do screw over people, no question. However, the solutions that Bitcoin offers, in my view, don't really address the problem and ignore the history behind why the gold standard failed. And that's why it's just insanity repeating itself again. We're seeing something that is feigning a lack of ideology, but in reality is very ideological at its base. And that's something to always be wary of. Now, that being said, is it something that you could invest in and make plenty of money? Obviously you can. That being said, it's speculative. I definitely have invested in crypto. I'm still holding some crypto, specifically Ethereum and Bitcoin, just so we're all on the same page. But it's not something that I'm doing aggressively. It's not a long-term plan because I know that it's, in my view, a very speculative asset at this point and nothing more. So be sure to let me know what you think in the comments. I'm sure plenty of people are not a fan of what I've been saying, but I think it's something that you should read into. If you're someone who hasn't read enough about Bitcoin, yeah, definitely read their white paper to understand where they're coming from. And also, like I said, read that book by Dave Columbia, The Politics of Bitcoin. It'll be very good as far as giving you a basic idea of the ideological underpinnings. And be on the lookout for that video. And in the meantime, thank you guys for watching, and I will see you guys next time.